In this video, I'll be explaining the importance of getting yourself pre-approved for a mortgage and how it is different from a rate hold. A mortgage pre-approval is a process where a lender evaluates a potential borrower's financial and credit history to determine how much they can borrow and at what interest rate. It is an essential step for homebuyers before they start house hunting, as it gives them a clear idea of their purchasing power and helps them narrow down their options to properties within their budget. Here's how it works and the benefits of getting a pre-approval. Evaluation process. During the pre-approval process, the lender will review the borrower's income, employment history, credit score, debt-to-income ratio, and other financial documents to assess their ability to repay the loan. Based on this evaluation, the lender will issue a written statement confirming the maximum mortgage amount they are willing to lend to the borrower. The pre-approval may be conditional upon a satisfactory appraisal of the property, so it is advisable to put a conditional offer. Let's discuss the benefits of pre-approval. Realistic budgeting. With a pre-approval, borrowers know precisely how much they can afford, enabling them to focus on homes within their price range and avoid wasting time on properties beyond their financial reach. Rate protection. If interest rates increase after getting pre-approved, the borrower is protected from the rate hike for a certain period depending on the lender. Generally, this period is 120 days for most of banks and works differently for a fixed and variable rate. Suppose on Jan 1, 2023, 5-year fixed rate is 4.70%, which was locked at the time of pre-approval for 120 days and is valid till April 30, 2023. You went on to buy a house whose closing date is March 31, 2023, but by that time 5-year fixed rate got increased to 5.30%. In such case, you'll be protected against such a rate hike as you are closing your house within 120 days from the date that rate was booked. But if you are not able to close your house before April 30th, then the rate hold expires, and you'll get the rate existing at that moment. In case of a variable rate, a particular rate cannot be held, but only the discount from the prime rate can be locked, as variable rates are subject to vary with every rate change announcement by Bank of Canada. I'll be making a separate video to explain the difference between the functioning of a fixed and a variable rate. Increased negotiating power. Sellers are more likely to take an offer seriously from a pre-approved buyer since they have already undergone a rigorous financial assessment. This can give the home buyer an advantage in negotiations. Faster closing process. Pre-approval speeds up the mortgage application process. Once the borrower finds a suitable home and makes an offer, the lender already has most of the necessary information, leading to a faster closing. Now, let's talk about rate hold. A rate hold is a commitment from a lender to honor a specific interest rate for a set period, typically between 30 to 120 days. It is different from a pre-approval because it doesn't involve a full assessment of the borrower's financial situation. Instead, it is simply a guarantee that the lender will offer a specific interest rate if the borrower proceeds with a mortgage application within the rate hold period. The key differences between pre-approval and rate hold are: pre-approval involves a comprehensive assessment of borrower's financial situation, while a rate hold is a commitment to a specific interest rate without a detailed financial review. Pre-approval provides borrowers with the maximum mortgage amount they can qualify for, whereas a rate hold only guarantees a particular interest rate for a limited time. In summary, a mortgage pre-approval is a more comprehensive process that gives borrowers a clear understanding of their budget and financial capacity, while a rate hold is a shorter commitment to a specific interest rate without the same level of financial evaluation. Both can be valuable tools for homebuyers, depending on their specific needs and circumstances. But I would recommend a pre-approval over rate hold. If you have any questions, I'll be happy to answer them all.